Hello there. I hope you're all doing well. In this video, I want to talk about the true change in state of delivery, also known as true CSD. This is my original concept, built on ICT's change in state of delivery, but given a quarterly theory framework. This is what confirms every sequential SMT I take. Without it, I don't trade. Simple. The origin. ICT's change in state of delivery uses a series of candles that take liquidity. Wait for a closure about them. I took that concept and made it mechanical. Only the very first candle that creates a sequential SMT matters. One candle, one rule, one confirmation. Now, guys, this is a example of ICT's chain state of delivery. Now, every ICT trader who knows chain state of delivery, I can promise you they have lost so many trades just trading like this. This alone is not enough. Let me show you the first slide. This is the true change state of delivery. Why is this stronger? Now, not only that, let's say we took out a liquidity or important level, and market tends to, create a change state, but it closes below this, the candle closure low, and also look at this side. What is this? A BC, right? It's a fair value gap. It turns into what? An inversion fair value gap. It turns as a support to the downside. All right, guys, this alone is not enough. We either need a micro SMT here, right, or macro SMT. I don't know with ES. Like this alone, I will not trade this. I need more confirmation, and what confirms that is our sequential SMT. You get it? And same thing here, vice versa. We're waiting for SMT, either sequential SMT, either with ES or Dow Jones, or whatever market you're trading, whatever you sync with. Like this alone is not enough. Let's say we took out a liquidity, all right, but is this enough to go short? No. Why? First of all, the market didn't even trade into this gap. Second is that there were no SMT. So because whenever there is SMT, the market confirms, it's a high probable. That's why I don't trade with ISMT. The market probably trade into a, let's say, PD array, whatever, let's say inversion, a fair value gap, so to say. And then let's say we would trade high and then we use this as an inversion. You get the idea. And the market will probably this will become our balance price range. This is a price range. Same thing with the here. Market will probably change a PD array, then we'll trade down, and then we use this as an inversion. If we don't have an SMT here, maybe we'll create the SMT on the highs. You get the idea. The rules. We got bullish scenario for true change state of delivery. First, bullish sequential SMT must form. One asset sweep the previous quarter low, another fails. It doesn't have to be a quarter, to be honest. It could also be a micro, but of course, quarter makes way stronger. Why? Because that is our sequential SMT. This is only for bullish scenario, guys. And then second, identify the very first candle that ran below the previous quarter low, your true change state candidate. For example, let's say we are bullish, right? Market tends to go short, all right? Then we formed the high. The market went below here, and then we went above here. This is what confirmed with a body close. This is waiting for a retracement into a, let's say, imbalance. Then this is what confirms way stronger. Look for higher. Third, that candle must close bearish. If it doesn't, market's open. If closes bullish, look left, find the most recent bearish candle before the sequential SMT mark. Sequential mark, it's open. You get the idea. This one, right? We talk about this. Must close with a body above this high. That's what confirms a chain state or true chain state of delivery, not just a wick. And then fourth, we are wait for any candle to close above that open. That closure validates the true state of delivery. Again, same thing. And last but not least, entry retest of the true chain state of delivery candle body with a small rejection wick. Stop will be the sequential SMT low. Let's say we created a low with either with this or sequential, let's say with this, right? We'll create the SMT here. Change the color real quick. Let's say we create the SMT here. All right. And as soon as the market tapped into here, you went long. All right. Where will your stop be here if you went long? What is your stop? Below the CB? What I will recommend you, look, each person, like, there are different types of risk management. All right. I don't know what your target, what your risk management is, what your risk to ratio is. I don't believe in risk to ratio, right? What I believe is logical, whatever the market's trying to do. But I do not trade 1-to-1. Never. I don't do that. That does like stupid, to be honest. Now, let's say we create this is our breaker block, so to say. Will either be below the breaker block, which is, let's say, below this candle. Doesn't have to be below. Sometimes order from inside. But sometimes market tends to come and take out that order block and then moves higher. So it's of course better to, leave your stop below the SMT, which is in this scenario here, and you target the highs. That's probably like 1 to 2, 2.5. I know you guys don't love probably this text, but we will jump into charts, into real example, because only words alone, I mean, it is enough, but to be honest, we need examples which we can remember. That is how I learn. I need examples. I need real charts. I need real data, real time. So, for bearish, Chinese stability is a mirror. So it's exact same, but the opposite. Bearish sequential SMT, first candle to run above the previous quarter. High must close bullish. Markets open. Wait for the, close. Wait for close below. Retest entry. Stop on the sequential SMT high. Same thing, vice versa. Simplest way. You can take a screenshot of this. This is really important. You have to wait for all the confirmation step by step. First this one, and then this, and then market's open, and then wait for close below, and then when we retest it, that is where you enter, and then stop on this sequential SMT highs. Now we got validation and invalidations. Not all the chain state of delivery, a true chain state of delivery will work. Some of them are just breakaway gap. Wow, guys, if you just know what breakaway gap is, I highly recommend you to study on that. Now, valid, when it's a clean, energetic closure through the chain state of delivery, open, one candle, boom, through it, just like that. Validation and invalidation. First, when it's valid, clean, energetic closure through the true chain state open, one candle, boom, through it. That is our valid true chain state delivery. Now, when you should be concerned, 2-3 weeks above or below without a full body closure price simply isn't ready. You should be waiting for more confirmations. Because in trading, guys, 90% is just patience. It's just waiting. It's just the boring, just waiting on your hands, not doing anything. And the 5% is buying, 5% selling. Simply that. Third, when it's disrespected, because there are some keys that you can, the market will tend to give you that it will just respect it. First, closes beyond the body of the true chain state of the delivery candle in the wrong direction. Sequential SMT likely is going to fail. That means we formed, let's say from the market gives out chain state, right? Trying to go long, but the market isn't giving you any direction. Maybe create another CB, right? Maybe the market tried to disrespect this. So, or maybe create a SMT on the here. Always focus on SMTs, maybe micro. Look at the time. What time did this high formed? What time did this low formed? What is a draw? What liquidity we took out? Maybe we took out this liquidity. The market isn't going to disrespect this gap. This is not real chain state, etc. Guys, you can read the price just completely normal. Now, last but not least, disrespect it 3 times. Yeah, when it disrespect 3 times, just walk away. The market just low probability condition. Just do not trade. Not every day is gonna be trading there. Not every day is gonna be, speed and velocity and just perfect condition. No. Well, another tip: try to risk half um on Mondays and Fridays. I don't know. But guys, another tip here: try to study breakaway gaps. Like those are super, super crucial. When you study them, when you train your eyes, when you know which one is breakaway gap, wow, a whole new world will open to you, especially our Chinese state of delivery. Sometimes, let's say we created it like this, right? The market will just go higher. What? And you might ask, why didn't the market just get here? Because this is our breakaway gap. This gap should not be visited. Why? Well, there are a few reasons. First of all, you have to look at the bigger picture. Second, let's say maybe you created a gap here, and this one's become our balance price range, our range. Market should not even like retest here, and your stop will be just below the the BC, so to say, the value gap. But man, another tip, maybe the market, let's say we take out this high, right? With this high, with here, the market just awake, just tapped on it, not into this gap, but just on this high, and then maybe this gap is too small, right? And the market just went high. No retest here. That is our breakaway gap. But you can, of course, there are so many ways you can study. Well, I highly recommend you studying them. Asset trust hierarchy. NQ and ES are the most closely correlated. Highest trust when either confirms the true chain state of delivery. YM is the least correlator of the three. If only YM confirms, wait for NQ or ES. Guys, like you don't have, let's say you trade indexes, right? Indices. You trade NQ, ES, and YM, right? You don't have to look at YM. Like sometimes I don't even pay attention to YM. Like it depends on the condition. Maybe it's the market really out of the sync, then I do pay attention to YM. Maybe on NQ and ES we're going lower, but however on YM we're going higher. That also kind of gives you a hint, a help also, a overview how the market react. Maybe this will go lower and then this both assets will go higher. That's an example, right? And for Forex, GU and Euro confirmed simultaneously equals high trust. And GU alone equals lower trust, wait for Euro or dollar. Let's just do entry execution and then we'll jump into some charts. First, don't place a limit at the change state of delivery and walk away. Wait for the retest, right? Wait for a small rejection wave to form inside the change state of delivery body. A candle that opens, dips in, and starts turning away. This will not always, like, maybe once a week, if you're lucky, this will show up. The market will, dip into our, let's say, the a bullish or a bearish balance, and then you target the direction. But however, some days the market will just leave a breakaway gap. The market will not trade in. Another tip here. If there is a breakaway gap, the market will later turn like use it as a support or resistance. A breakaway gap then becomes into a direction. So always extend a breakaway gap. And then that rejection is your confirmation of the level is holding. Enter there, not before. Let me show you some charts, some example, because this thing occurs in all time frames, guys. Everything's fractal, remember that. It doesn't matter if you're trading on seconds or daily. It doesn't matter, guys. Let me show you. Guys, chain state of delivery is super important. Like really, really important. So here, this is a chain. For example, this one. Why did we have this huge lower taking place? Why? Because of, right? Of course, if you want to enter, you will enter somewhere there. Why? Because that is where the market had our strong. Here, if we pay attention, what is this? If we pick out the body, do that. That is our chain state. This is our chain. Oops. Chain state of delivery. Why? Because we close the body below and then also the body of that low. Pay attention. Oh man, let me just mark it out. What is this? This is another CB. Left it. We disrespect it. So what are you expecting here? A market tap higher into here. This gap and this gap. This becomes our bearish scenario. Just like in the first example I gave you. What confirms is way too strong. Like it's 100% the market's going lower. What? Well, first of all, if you look at the ES, I right now have only ES. Same gap. Let me mark it out. Same gap, but it is not traded in. This is SMT fill. I made a video about this. This is SMT fill, guys. The market traded into this high, this gap, CB, inversion value gap, and then ES did not. Another thing, you might say, is there any SMT? No, we formed the same thing on the high. No, there is. If you pay attention to the weekly, this is Monday. This is last week. ES did not check out this high, made a lower high. However, Nasdaq did check out that high. Interesting, huh? The confirmation tool. A true Chinese level is what separates entering on a hope and entering on a confirmation. It filters the sequential SMT that fails from the ones that move. Right? Paired with a narrative, it is the single most reliable confirmation in the system. Guys, after SMT or sequential SMT, to me, the Chinese state of the level or true Chinese level is important. If you study on both of this alone will give you this will help you in your journey a lot compared to all the other concepts, all the other age, all the other PDRs out there. These ones are really important because these both work on all the assets, all the stocks, all the, you can use this on crypto, on Forex, on indices. It works in everywhere. That is the beautiful part. Guys, I hope you got something from this video, some values.